Hi friends, in this video we'll learn how to prepare the balance sheet. In our earlier videos we have seen how nominal accounts relating to purchases, sales, wages, salaries, rent, discount allowed, bad debts, carriage inward, carriage outward, commission paid, commission received, income from investments. We have seen how nominal accounts are closed and their balance are transferred to the trading account and the P&L account. So what happens is at the end of the year, we go to all the nominal accounts in the ledger. The balance which are there in those nominal accounts are transferred to the profit and loss account or the trading account, and the balances do not remain. But even after passing the closing entries, in this video we see how there are some other accounts which are still having some balances. If you see, I've just taken an illustration here. After transfer of nominal accounts to the P&L account and the trading account, I still find there are some balances in the ledger which are showing some balances. Like you can see, debtors account is showing some balance in this ledger. We are assuming that the trading account and the P&L account has been prepared, and there are still some accounts in the ledger which are not yet closed. Debtors account, it started with a debit balance of 2 lakh. There was a sales of 25 lakh. We have collected 20 lakh from the customers and we were not able to collect a lakh of rupees from the customers, which became bad debts. So debtors account is showing 25 plus 2 is 27, minus 21 is 6 lakhs. Debtor account is showing a credit balance, not credit balance. Credit side, the amount is less by 6 lakh rupees. So what do we do here in the debtors account? We just write carried down 6 lakhs and we take it to the higher side, brought down 6 lakh. Now, what should happen to this balance? This account is not closed. What we do is, such balances are listed in a statement called as the balance sheet. This is not an account, this is only a statement. This is a statement of balances. Balance sheet of trader as on 31st March 21. Left side we show the liabilities of the business, liabilities rupees, and right side we show the assets of the business. This is the format which we do. So what will happen is, there is some balance left in the debtor account. So that balance is not closed, that balance is transferred to the balance sheet asset side. We show the balance here, 6 lakhs. Now, what is the purpose of this balance sheet? It will show you the position of the assets and the liabilities, and it will also help you in doing one thing. We want to know which are the balances which we have to take to the next accounting period. The account balances which have to be transferred to the next accounting year. Let us suppose we are using a new ledger every year, and that generally happens. We have to use new books for new years. So for a new year, new accounting year, we are going to use a new ledger. But those accounts which are still having some balances in the last year, those balances have to be transferred to this ledger. So those balances which have to be transferred to the next year are going to be shown in the balance sheet, and these balances are going to be taken to the next year. I'll show you how those balances are taken also. Now, if you see, there is one more account here, bank account. The account does not seem to be balanced. Debit balance of 1 lakh starting, 20 lakhs collected from customers, another cash receipt of 1 lakh, 22 lakh. There have been withdrawals of 21 lakh. So there is a balance left of 1 lakh rupees. So what do? I just simply write it on the higher side, brought down 1 lakh, carried down 1 lakh on the lower side. So there is a balance of 1 lakh rupees. Where do I show it? The balance is shown in the balance sheet asset side. It is an asset for the business, that is why it is shown on the asset side, 1 lakh. Cash account. Again, it is also showing some balance. There is some balance left in the cash account. We started with a debit balance of 1 lakh. There were receipts of 10 lakh. There were payments of 10 lakh. So we are left with a balance of 1 lakh rupees carried down. Again, brought down 1 lakh. The cash balance is going to be carried forward to the next year. So we are going to show cash account in the balance sheet asset side. Land account, we can see some balances here in the land account. Land account is showing a debit balance 5 lakh plus 10 lakh 15 lakhs. So carried down 15 lakh, brought down 15 lakh. So this balance is shown again on the balance sheet asset side. Land 15 lakh. Only those balances which have to be carried forward to the next year are shown in the balance sheet. If you see the buildings account, 5 lakh is the opening balance, 50,000 we purchased, and there is a depreciation of 50,000. So carried down 5 lakh, brought down 5 lakh. So we have now building account also, which has to be shown in the balance sheet. Building account 5 lakh rupees. Machinery 4 lakh plus 1 lakh is 5 lakh minus 50,000, carried down 4 lakh 50,000, brought down 4 lakh 50,000. So machinery is also showing a debit balance of 4 lakh 50,000. I'll show it on the balance sheet asset side. It is an asset for the business. Machinery 4 lakh 50,000. Then we have furniture. There were some entries during the year. Furniture 1 lakh plus 20, 120 minus 10,000 depreciation. So it is left with 1 lakh 10,000. Carried down, brought down 1 lakh 10,000. So furniture is also shown in the balance sheet asset side. Closing stock. If you remember, we passed an entry for closing stock account at R2 trading account. If I prepare the closing stock account, there will be a debit entry in the closing stock. So closing stock account at R2 trading account is the entry we learned. So there is one amount in this account. So this account is not yet closed because this will be sold in the next year. So till that time, this has to be carried to in our books of account. Carried down 1 lakh, brought down 1 lakh. So now closing stock is also shown in the balance sheet. Closing stock 1 lakh rupees. Creditors account. Now we have some balances left in liabilities also. If you see creditors account, 2 lakh was the opening balance, 25 lakh purchases, 20 lakhs payment. 25 plus 2 is 27, minus 20 lakh is 7 lakh rupees left. Carried down 7 lakh, brought down 7 lakh. So we have to pay to the creditor 7 lakh rupees. It is showing a credit balance. It's a liability for the business. We have to repay it to the suppliers in the future. So creditors, I'm showing it on the liability side, 7 lakh. Bank loan, there is one more account in our ledger. 5 lakh was the opening balance, 1 lakh payment we have made. So carried down would be 4 lakh rupees, brought down would be 4 lakh rupees. So it's a loan for the business, hence we have to show it on the balance sheet liability side. Bank loan 4 lakh rupees. We are left with one last account, capital account. It started with a credit balance of 19 lakh and there was net profit which was transferred to the capital account 2,60,000. So 21,60,000 is the balance in this account. Carried down 21,60,000, brought down 21,60,000. So it is again showing a credit balance of 2160. It should also be shown in the balance sheet. Capital account 21,60,000. So now we have transferred all the balances, or we are showing all the balance in the balance sheet. Let us see whether the balances are tallying or not. Finally, the total should tally of both the assets and the liabilities. Land 15 lakh plus 5 lakh 20, 24 lakh 50,000, 24 lakh 60, 25 60, 26 60, 32 60 plus 2 lakh is 34 lakh 60,000. Thirty-four lakh 60,000 minus 11 lakh is 23 lakh 60,000. The balance should tally. We may have one more account in our books. 34 60 21 plus 11 is 32 60. I'll just total it once again. I think debtors we have taken the wrong balances. Debtors balance was not 6 lakh. Debtor balance was only 20 plus 2 lakh plus. Okay, the balance is right. Maybe in the capital account there is one more entry which we have not recorded here. We'll just write one more entry in the capital account. Buy bank 2 lakh rupees 2360. So we'll see whether the balance sheet is tallying now. 2360 plus 11 lakh will be 34 lakh 60,000. So this is how you prepare the balance sheet of a trader. So this is the process which we follow for the preparation of the balance sheet.